moving on, taking a quick look as to how markets are panning out. Last we checked, in fact, the market was at its day's high with close to 11,090 levels. 11,890 is where we are. Day's high, 0.4% kind of gains is what we're looking at. Now moving on, and as promised, we are now being joined by Nishant Arya, Executive Director of JBM Group. In fact, the first question that I'll have to Mr. Arya, well, first of all, thank you for joining here on Business Television India. Now, talking of your revenue mix, 85% comes in from your component division, 8% from the tool room division, and bus division contributes as much as 7%. Now, I'll begin by asking you as to what is the kind of outlook that you have for the component division in the wake of the kind of slowdown that one is looking at when it comes to PV sales. And so if you could get a sense of the kind of outlook that you have for this particular segment.
So I think on a longer term perspective, the market would be quite bullish. I see that the first 6 months of this financial year would be a bit tough for the industry, and I think after the elections that has brought more solidarity to the country also, that a stable government is in place, and now we have a lot of expectations from the budget, where we see that the GST may get reduced further from 28% to about 18%. The focus on electric vehicles is there, where JBM Auto is a very strong player in the public transportation segment. Similarly, the government is also trying to see that how technology companies are being given priority, and they are being given some special kind of funds for investment to R&D and certain tax breaks and other things. I think all those things put together seem like a very conducive environment for the industry from a longer term perspective. But definitely these 6 months will be challenging, and we as a company are focusing in a big way on frugal engineering, on really optimizing our costs, and that's a good thing from a longer term angle, because we are able to really clean the whole organization and make it ready for taking the leap forward. And all of us had gone through a similar kind of challenge in 2008 when the downturn had hit the industry, and this last 6 months of the last financial year and the first 6 months of this financial year are a similar kind of scenario where due to financial crunch and other issues, the industry has faced this challenge. But at the same time, if you see that the tool room division has picked up in a big way, we have had more than 50 to 55% growth in the tool room division. The bus division has come up in a big way. From last year doing 17 crores, this year it's clocking about 120 crores. And we see in the future it growing much further. So the mix of JBM Auto is changing. And in the component division, even though you call it component division, but earlier it was primarily PV focused only, and now we have gotten a good mix of commercial vehicles, little bit of two-wheeler and farm equipment into the component division as well. So we are well diversified as a company and poised for future growth. And at this time, it is a very crucial moment and a very interesting time for JBM Auto as a company, because JBM Auto is going through a merger process, which is under approval, which should be approved any time in the upcoming week. And we will be consolidating a lot of the competencies and know-how which we have in different organizations into JBM Auto, and it will become a center of excellence on technology, on upcoming technology, and as well as a lot of know-how which the industry has on lightweighting, on chassis suspension systems, on R&D, on engineering, on value engineering, and as well as really improving the time to market substantially for any end customer, where we are getting into certain wide spaces like skin panels has been a new business in the last few years, which has been developed, which no other Indian auto manufacturer is doing. Similarly, we have focused on high value added items like chassis and suspension systems, where we are a full service supplier. We are designing, engineering and manufacturing.
All right, Mr. Arya. Also, you've been receiving some orders, at least from the sheet metal business front. What is the order pipeline looking like? And also, if you could run us through the recent substantial orders that you might have won on that front.
Yes, so as an organization, we are very clear that we have been looking at a clear-cut growth trajectory in the industry. Like this year, if you see, so we will be looking at least 20 to 25% growth as an organization, as a bare minimum, considering the industry scenario. And if the industry improves, that can be further enhanced. So from our component division, from our bus division, as well as from the tooling division, and as you've seen that the enhancement in the tooling division, it is not only in top line but in bottom line also, because the tooling division contributes to the bottom line quite significantly, as the EBITDA margins are much higher compared to the other divisions of the company. So that makes it very, very essential for the growth of the organization.
And one final question, Mr. Arya, what is the kind of debts that you have on your books, and also if you could take us through your capex plans that you might have set aside for yourself?
So, in last 3 to 4 years, we have invested more than 500 to 600 crores in JBM Auto. So this year we are not having any significant capex which we are looking at in JBM Auto. Whereas we will be focusing more on asset turnover and increasing the utilization of the assets which we have. So there will be no substantial capex. And on the debt side, we are very comfortable as per the industry standard, as the organization has been repaying a lot of debt which we have, and we are very comfortable because post merger also we will be seeing that the cash flows of the organization are able to sustain the next 3 to 5 year plan which the company has of about 20 to 25% growth on a YOY basis.
What is the debt levels in absolute terms, the net debt?
I'll have to check the exact numbers, but currently we are at our structure is about 1:1.12.
All right, Mr. Arya. Well, thank you on that note. Thank you for speaking to us here on Business Television India. With that, completely out of time on this edition of this small cap show. Thanks for watching, but you have Call BTVi lined up next, wherein viewers' queries will be taken by Nivrita and Dipanshu. So stay tuned, keep watching Business Television India.